Welcome back. Well, let's discuss some numbers now. Chola is in fact in the green. This is on the back of a good set of Q3 numbers. AUM growth or assets under management growth continued to be strong due to healthy disbursements. Asset quality also was quite stable. Arulselvan, the Executive VP and CFO of the company, now joins in on the show. Mr. Arun, thank you very much for taking the time out. Well, for most NBFCs, last quarter was quite a difficult quarter because of the liquidity crisis and the crunch that many of the NBFCs faced. But it doesn't seem to have impacted your numbers at all. Your AUM, in fact, has been 30% for the past 3 quarters and sustained this quarter. So tell us what went right.
Thank you for the time. It is because we had been prepared well for this liquidity crisis. Generally, we run a very tight asset liability management program within the company, even before the liquidity crisis did hit the market. And at the time the liquidity crisis hit last September end, we had actually 5,000 crores worth of drawdowns, and which we could quickly draw down and keep the cash available. So keeping the cash available had a negative impact on the cost of funds, but that was worth it compared to the other problems the rest of the industry could have faced. And add to it, the reputation of the group and the company has helped this cash flows keep coming in from banks and as well as other lenders. So we did not have any liquidity crisis, so we could be selective about our underwriting and growth, and we were able to maintain both asset quality as well as show a good set of growth on the asset numbers.
What has been the growth in between new vehicles, used vehicles in the quarter?
New vehicles, we had not grown that much on heavies. The heavies industry also slowed down. We also slowed down a bit, but we had grown more on the lights and mini lights as well as on the cars and MUVs. Used, we went up a little bit because the market opened up. Whenever there is a slowdown in the new segment, the used market opens up a bit, so we could do a little bit more on the used. So we were better off. We had almost like a 26% growth on the used segment, whereas on the new, across various sub-segments within the new, which is like heavies, lights, cars and MUs, etc. Overall, I think we had clocked in the range of around 10% on the new side.
Okay, so used vehicles probably picked up in terms of disbursements for you all. But your net interest margins, they've been on the declining side. I mean, 6.8% compares to 6.9% in the previous quarter and versus around 9% maybe a couple of quarters ago. So the trend seems to be on the downside. What is your guidance there?
See, what happens is over the past few quarters, while this quarter the heavies have come down, over the past few quarters our heavies volume have gone up. When heavies volume goes up, yields come down. However, this is more or less compensated by lower OPEX and lower NCL. So ultimately we focus on the net as returns on total assets, which is a ROTA. So in a basket of products where you have multiple products with yields ranging right from 11% or even lesser than 11% to all the way up to 18-19%, the NIMs will keep fluctuating depending on where you are focusing on and where the market is growing. But this is more or less compensated by way of the OPEX being low or high depending on the yield. For example, in heavies, these are high ticket loan items, so your OPEX will be low and your NCL will be low. On the high ticket items like used or two-wheelers, there the ticket sizes are small, so your OPEX will be high. So this sort of balances the whole thing. So we shouldn't only focus on NIM, we should look at the total ROTA of the company. The ROTA has been growing, as you would have seen.
Is there a one-time income of any sort in the NII? Or
See what happens is under the new regime of the accounting standards in the Ind AS system, you have to upfront the profit when you're doing assignments. So I've done a little bit of assignments during the quarter, but that is a normal process. This is nothing to say that we had done these assignment deals from the perspective of shoring up the NIM or shoring up the profit. These are done to maximize availability of funds, because generally we do priority sector assets as a securitization or assignment, which gives us a good rate benefit on the cost of fund side, because the banks are willing to take this off at a lower price.
Sorry, when you say assignment, one-time assignment income, what does that mean? I mean, what would this entail?
See, when you do an assignment transaction under the new Ind AS regime, you have to upfront the profit. That is the future interest. There is a difference between the interest of the pool and the interest of what is being negotiated with the investor. So the difference between that, there is a time value of money. So you have to apply the time value of money and upfront the profit. This is as per the accounting standards, and we don't have a choice on that.
Okay. All right, Mr. Arul, we'll leave it on that note. Thanks very much for joining in and speaking with us. So that's Chola Mandalam. The stock is up around 4%. Take a break now. But up next, FNO strategy. Stay tuned.